How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update for gold versus the US dollar. And as we can see today on Tuesday, I know you guys can see Wednesday's candle is forming already, but it starts at 5 p.m. New York Eastern Standard Time, so don't worry about that. Right now, we're talking about Tuesday and what occurred here. Exactly what we talked about in the previous episode happened today. So you got a small range down close candle, like we talked about, and we said we're going to go long with a buy limit order at the close and a buy stop order at the open. So we're trying to go long with the limit on weakness and go long with the stop on strength. Little to no drawdown, so that in the channel today, I shared it with you guys, able to catch that long all the way up to those swing high projections that we wanted it to. Once price got here, retail traders were most likely chasing price. So at one point in time, we know that the candle opened, it ran up like that, and then it faded off from it because the retail traders are late to the party. By the time the large range cycle kicks in, it's too late. In order to catch the large range days, you need to be in the market before the move even occurs. That is facts. Now, if you go down on the lower time frame today, we can see that London is what takes gold straight up, right, into the swing highs. So that swing high here and that swing high here. And this is where we have our limit order and stop order here. So little to no drawdown off of that entry. However, once price got up to these highs, we can see price started stalling. Then we got into the London lunch in between this time period here, 5 to 7. Most likely it's going to be consolidation. I teach you guys this all the time. Do not trade in this time period because you're going to run into consolidation. Then we go into New York. We can see it runs up and we have a quick repricing after taking out these highs. We can see London lunch does make the high of the day, but considerably it's the London session. New York fades that all the way down. We do get that classic ICT order block here. So price comes down, right back into it. We're able to get that short here in New York first, and then we were able to take partials on the way down, and then we got another short opportunity here to scalp out maybe a couple pips and London close. And that's what we got here. So inversely to that, you got the DXY still going down. Like I said, many people are sitting here telling me that dollar is bullish, and I do not agree because it's showing the signs of wanting to continue to drop lower. We go on the daily time frame, just using what we have on the chart. We don't have to use too much, but we're leaving a premium range. Remember how we started off this month? We're a couple days into this month already. Time flies by really quick. We were in a premium range from this high to this low. We're in that red range here. You see how quickly it leaves that? Because commercials are selling. Add on the confluence of July's opening price. We're above the opening price for the month. They pull traders to the wrong side. They break a swing high and then they fade. Quick repricing. Swing low broken, and then we have another swing low broken. Today, we broke the IPTA 20-day look back low. Now, many people are asking, will there be signs of price reversing here and going back higher? Potentially, but we have to wait to see what happens either on the lower time frame, so anywhere from 4 hour to 1 hour if you want to really scale down to see if you're going to get that shift there instead of waiting on the daily to give you that pullback, because I'm suspecting a pullback eventually, some type of lower swing high. Then we continue going, chasing the 40-day low and the 60-day low. These relatively equal lows most likely is going to get target. The way price is just dumping like this, most likely is going to get there. Now, if we look at anything that's correlated to the DXY, so for instance, if you look at the weekly chart, like I said, I only base myself on the higher time frames because I wanted the higher time frame trend. We can see here Swiss franc right here, US dollar versus Swiss franc, recently broke a swing low, broke another swing low. They're selling really fast. You also notice as well, look at the up close candle here. Now, many people are asking me that entry technique that I showed on the channel, can you use it on any other time frame? You can. Imagine putting a sell limit here at the close and a sell stop here at the open. You're in on strength, in on weakness. Look at how it fades. You're able to catch massive pips on the weekly chart. Same thing here for UCAD, 2 up weeks. Those are 2 opportunities to continue to sell. But you can see how we broke a swing low and then we got a lower swing high formation. That's all we needed here. Now, to really confirm it, I want to see this current week break the previous week's low, and then moving on next week or the next following week, we get to this swing low as well. So we raid the sell side liquidity here. You see this on a dollar. You have that small fair value gap. Price was trading in, respecting it multiple times, and now we broke that swing low. We want to see price probably pick up speed and sell off and take out these equal lows here. So that's what I'm currently looking at. If you also look at the UJ, so just for instance, because I've been tracking this for the chat as well. If you're looking at UJ and you realize that monthly order block I was telling you guys about, you'll see that price action is completely melting right now. It's just, as soon as it hits this up close candle here, it gave a nice reaction to go lower. So if you zoom in, you'll see, oops, take that off. You see here in the price action, price is just continuing to fade off of that bullish order block. So it hasn't been here in a while, this last up close candle. And price is currently traded into it. And now you can see price is probably going to fade that. If you look at the daily chart, from where we hit that bearish order block, you can see as well, price is fading quick. Recently broke a swing low right there. We also recently broke a swing low up here as well. 1, 2, 3. That's the swing low candle here. It broke that. So I wouldn't be surprised if there was going to be a pullback and then price fades again and takes out all these clean lows. As of right now, Bank of Japan does have negative interest rates, which favors the US dollar or any other foreign currency. But as of right now, there might be signs that maybe BOJ may be making an intervention in raising the rates instead of having negative rates, but we'll see. We also have the Feds coming up with their monetary policy as well. We want to see if they're going to either raise rates again or lower them or keep them the same. And I think that will definitely impact where UJ is going to go and where DXY is going to go. As of right now, we haven't seen a huge decline in UJ like this in a while. Going into 2023, we've only seen a huge bullish move. This is a really steep move coming from a premium range. So it's really overbought now. It's expensive to buy UJ here. Maybe UJ gets lower and then they buy it cheap again and push it back up. But we'll see in the near future. If you also take a look at British pound versus US dollar, come here actually. You'll notice that GU was respecting that bullish order block I was also referring to as well. So you see this last down close candle here. Price traded all the way down into it, gave a nice reaction, respected it. And every down close candle ever since then has been a new buying opportunity for price to go higher. So that's that bullish order block right there. Down close, buy at the open, buy at the close. Same thing, using that entry technique there. And if you were to look down at AU, you can see AU right now is giving the same idea as well. So you have these down close candles. You buy at the open, buy at the close. The most recent down close candle we have is right here. And what is going to be your target if you're going to go long off of the open of this down close candle? You're going to use a buy stop and aim for swing highs. So there, 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 and there. So that would be the highest target, of course. These swing lows look to be protected because we have a higher swing low. Market makers are probably buying and trying to push price higher. Probably going to click out all this buy side liquidity here and probably even dig up into this range here as well. So hopefully this was insightful. Peace.